Hey there, crypto fam. Welcome back to the Coin Classroom, where we make everything about crypto fun, easy to understand, and, of course, a little bit exciting. Now, if you've been hearing the term Bitcoin ETF floating around lately and you're like, wait, what the heck is an ETF? Don't worry, we've got your back. Today we're going to break it all down for you. We'll talk about what a Bitcoin ETF is, how it works, why it matters, and if it's a good idea for you to invest in one. So grab a seat and let's dive into this crypto topic that's taking the world by storm. All right, let's start with the basics. Before we talk about Bitcoin ETFs, we need to understand ETFs in general. An ETF stands for Exchange Traded Fund. Sounds fancy, right? But it's really just a way to invest in a bunch of assets, stocks, commodities, or in this case, Bitcoin, all at once, without having to buy each individual asset yourself. Let's break that down with an example. Imagine you want to invest in the tech sector. Instead of buying shares of each tech company separately, Apple, Google, Amazon, etc., you could buy a tech ETF, which holds shares of all those companies in one neat, convenient package. The beauty of an ETF is that it lets you diversify your investments without the hassle of managing each one. Plus, they're easy to trade on stock exchanges just like regular stocks. In short, ETFs are like investment baskets that hold a variety of assets, and you can buy or sell them in a snap. So, now that we know what an ETF is, let's talk about the Bitcoin ETF. A Bitcoin ETF is an exchange-traded fund that holds Bitcoin or Bitcoin futures contracts in a way that allows you to invest in Bitcoin without actually owning any Bitcoin yourself. Instead, you're investing in a fund that tracks Bitcoin's price. Here's how it works. Traditional ETFs hold stocks or commodities, but a Bitcoin ETF holds Bitcoin itself or Bitcoin-related assets, like Bitcoin futures. This allows you to trade Bitcoin like a stock without worrying about setting up a crypto wallet, dealing with exchanges, or managing private keys. All you need is a brokerage account and you're good to go. It's like buying Bitcoin without the headache of storing it securely. The ETF takes care of that for you. How cool is that? Alright, so you know what a Bitcoin ETF is, but how does it actually work? Let's break it down in simple terms. When you buy shares of a Bitcoin ETF, you're essentially buying a slice of the Bitcoin the fund holds. If the price of Bitcoin goes up, the value of your ETF shares goes up. If Bitcoin's price drops, so does the value of your ETF shares. Some Bitcoin ETFs hold physical Bitcoin, while others hold Bitcoin futures, contracts that bet on Bitcoin's price in the future. The main difference here is that a physical Bitcoin ETF directly owns actual Bitcoin, while a futures-based ETF holds contracts that speculate on Bitcoin's price movements. Now, you're probably wondering, why would I want to buy a Bitcoin ETF instead of just buying Bitcoin myself? Well, let's talk about that next. There are some solid reasons why someone might choose to buy a Bitcoin ETF rather than buying Bitcoin directly. Let's break them down. Easier to trade. With a Bitcoin ETF, you don't need to worry about setting up a crypto wallet, dealing with exchanges, or trying to figure out how to store your coins safely. You just buy and sell Bitcoin ETFs just like you would regular stocks. It's that easy. No need to worry about security. One of the biggest concerns with owning Bitcoin is security. You need to make sure your private keys are safe, or you could risk losing your crypto forever. But with an ETF, you don't need to worry about any of that. The ETF provider takes care of security. Tax reporting. Made easy. Crypto taxes can be a headache, but with a Bitcoin ETF, tax reporting is way easier since it's treated like any other stock investment. You don't need to track every buy, sell, and trade of Bitcoin. The ETF does that for you. Diversification. Bitcoin ETFs can be part of a broader investment portfolio. You can invest in Bitcoin without putting all your eggs in one basket. You can combine it with stocks, bonds, and other ETFs for a more balanced portfolio. Regulatory oversight. Bitcoin ETFs are typically regulated by government agencies, which can provide a sense of security for investors who are cautious about the crypto space. So, Bitcoin ETFs make it a lot easier to invest in Bitcoin in a way that's familiar to traditional investors, But of course, there are also some drawbacks we need to talk about. Let's quickly go over the pros and cons of Bitcoin ETFs so you can decide if they're right for you. Pros: easier to trade, no need for crypto wallets or private keys. Tax simplicity, it's treated like a regular stock. Security, you don't need to worry about protecting your private keys. Diversification, Bitcoin can be part of your broader investment strategy. Cons: not real Bitcoin. With a Bitcoin ETF, you don't actually own Bitcoin, you own a share of a fund that tracks Bitcoin's price. Fees: Bitcoin ETFs charge management fees which could eat into your profits over time. Regulation risk: the crypto world is still evolving and regulations can change. Governments could crack down on Bitcoin ETFs or impose new rules. Futures ETFs can be riskier. Some Bitcoin ETFs are based on Bitcoin futures, which can be more volatile and risky than owning actual Bitcoin. So, while Bitcoin ETFs are super convenient, they might not be the best choice if you want to have direct ownership of Bitcoin or avoid paying those management fees. Now, here's the big question: should you invest in a Bitcoin ETF? The answer depends on your investment goals, risk tolerance, and personal preferences. Let's break it down. If you're new to crypto and don't want to deal with the technical side of buying, storing, and securing Bitcoin, then a Bitcoin ETF might be a great way for you to get exposure to Bitcoin. If you're already a Bitcoin enthusiast and you want full control over your coins, then you might prefer buying Bitcoin directly and storing it in your own wallet. If you're looking for a long-term, hands-off investment that's easy to trade and adds some crypto exposure to your traditional investment portfolio, a Bitcoin ETF could be a good option for you. If you're trying to avoid risks like the volatility of Bitcoin futures, then a physical Bitcoin ETF might be more your style. At the end of the day, there's no one-size-fits-all answer. But whether you choose a Bitcoin ETF or buy Bitcoin directly, it's important to do your research and understand the risks involved. And that's a wrap. You now know what a Bitcoin ETF is, how it works, and whether it might be a good fit for your investment strategy. If you're still unsure whether a Bitcoin ETF is right for you, that's okay. The crypto world is full of options. The important thing is to stay informed, be aware of the risks, and make decisions that fit your goals. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you can stay updated with all things crypto. Got questions? Drop them in the comments below and we'll be happy to help out. Until next time, stay safe and happy investing.